I do have to wonder what we need to see specifically when it comes to the Strait of Hormuz for this drop in oil to be sustained. Good morning.
Hi, good morning. I think there are going to be two things. So one on the deal-making side and one on the physical flow side. So on the deal-making side, I mean, clearly if there is language about this opening up, if there is any movement, perhaps if the Trump administration says that they're going to remove their blockade, then maybe we might see some movement by the Iranians to also do the same on their basically de facto blockade. So as long as this, 60-day ceasefire continues, with some sort of agreement to remove restrictions to the Strait of Hormuz, that would be, I think, key. Now, then after that, the market will be closely watching whether or not you see an increase in shipments, right? A lot of the ships going through Hormuz go through dark. A lot of them are connected to Iran or have connections with countries that have brokered deals with Iran. So, for example, Pakistan was able to get some liquefied natural gas shipments through the Strait of Hormuz because there was a deal between Islamabad and Tehran to let that happen. But if you see less restrictions, so other ships for countries that haven't been making these deals, if you're seeing less ships going dark to go through, and if you see an uptick in traffic, those would all be positive signs. We have seen a bit of an uptick. It goes up and down. Iran says that there was one day recently that was 33 ships that went through Hormuz. That would have been the highest since the war started, but it's still far below where you would have been pre-war, which was 135 ships or more on a daily basis. So that's the big question. How long does it take to get those ships back to those levels, and will ship owners, the crews on the ships, and insurers, will they all be comfortable going through even if there is a extension of the ceasefire?
And then when you factor in the damage to infrastructure that we've seen through this war and the tightness that we've seen in the US market highlighted by the data this week, what's the longer term outlook for the oil market then, Stephen?
I mean, there are some analysts who are saying if things were to go back to normal over the next few weeks, which might still be difficult, you are still facing a tighter potential deficit for the rest of the year, and then that kind of goes away into early next year. But there are a lot of things that do need to change. Some facilities have had to ramp down production. They've been damaged, and not just in oil either. I'm thinking about the world's biggest liquefied natural gas export facility at Ras Laffan in Qatar. 17% of that facility's capacity has been damaged, and Qatar itself said that it would take 3 to 5 years to repair that. So getting back to pre-war levels, yeah, the ships can go through, but there are facilities that either have to come back and resume production, and that can take time. It requires maintenance, or they were damaged, and that requires repairs, like you see at the LNG plant in Qatar. So that does mean that even if there is a peace deal, even if there is a resumption of traffic, even if all those things were to happen, it doesn't mean that the oil is flowing and the gas is flowing to the same level that we saw in February.